Good afternoon and happy Thursday, everyone. It is Scott Wohlers with River Place Capital. It is Thursday, October the 31st. Going to take just a brief minute to discuss what markets did last week, as we did finally see that down week in the equity markets, with the S&P 500 being down the least of the indexes, down 96 basis points or 0.96% on the week. The mid-cap index, as measured by the S&P 400, was down 2.84%, and the small caps were down worse, down 3.3%, as rates continue to move higher. That's why you saw your smaller cap names, your mid and small, being down worse than your large cap names. That all has to do as rates are ticking up with the cost of borrowing, and small and mid cap companies rely on the banking system for borrowing money versus issuing debt via bonds. And so that's why you saw those sell off worse. But I wanted to point out, as we're sitting here year to date, the S&P 500 is up right around 20%, even with the down day that we're seeing today in the equity markets. But it's up about 20% year to date, and we're still getting earnings in, and we still have plenty of earnings to get. But what we're seeing so far from the corporate earnings is great earnings. And companies are saying this is actually our bottom quarter, and we see projections for earnings growth moving higher. But as we got in, or as we sit today too, at a price to earnings forward multiple, we're about 21.5 times forward earnings. The historic average is, when things are good in the economy, you historically are between 17 and 18 times forward earnings. Now, there's two things going on here that I wanted to point out, because people will point, well, the market has got high valuations and there's nowhere left for it to run. It's trading at historically high multiples. It means it's poised for a pullback. Well, 20 years ago, the leading index, or the leading industries in the S&P 500 would have been energy, financials. Those were the leading sectors that had the majority of the market cap size in the S&P 500. So you really wouldn't see a very high multiple, and wouldn't give a high multiple historically to those sectors. 14, 15 times is, about normal premium that you would pay for those type of companies. But as we've transitioned over the years, over 30% of the S&P 500 right now is technology. Well, the average PE ratio on the technology stocks has historically been about 30 times earnings. So it is okay for us to be at a higher multiple, because we're paying for the growth of these technology companies that have the potential to grow earnings so drastically and so quickly over a short period of time. So that's one reason why we believe that the higher multiple is okay. But at the same time, we will tell you that stocks cannot run up, as we would say in the industry, or you might hear in the business someone say, up against the sky. Stocks don't run up to the sky, and there's absolutely a lot of truth to that. So as we sit here, 5 days away from the presidential election, we have not seen a lot of volatility to the downside leading up to this, and a lot of good news has been priced into the equity markets. It wouldn't be shocking to us if we did see in the next couple of weeks, or after the results of the election, a slight pullback in equity markets. Like I said, we are up 20%. There's a lot of profits baked in. There's a lot of uncertainty ahead of us. So the question begins, what do you do as an investor? Well, what we've done as a firm is, just over this quarter, we've raised a little extra cash moving into this, and we're sitting on a little extra cash, more than we normally are ending into the season, because what we also want to do is, if we do get a quick pullback or something along those lines in the equity markets, we want to then deploy that cash and get a nice bargain in the equity markets, because we believe whatever it is that happens is going to be short-lived, because the underlying economy, it remains very strong and solid. We got GDP at 2.8%. Even though it missed expectations, it's still a solid growth rate for the U.S. economy. Corporate earnings continue to go higher and grow, and companies continue to guide up. So we see the fundamentals there for the markets to move higher moving forward. So as always, if you have questions about how to navigate this time, or what to do ahead of the election, or what to do afterwards, give us a call. We'd love the opportunity to speak with you. You can reach us at 904-346 3460. Or as always, check us out online at www.riverplacecapital.com. I hope everyone has a wonderful rest of your week. Thanks so much for watching.